So far, we've talked about federal income tax and state income tax. This is another branch of state income tax that's called graduated tax. So we've talked about the word graduated before. We did graduated commission, where based on how much you sold, you could make more of a commission rate. Well, similar idea for graduated income tax. So graduated income tax involves different tax rates for different levels of income. So it works a lot like graduated commission, like I said. So when using graduated income tax rates increase as a person makes more money. So the more money that a person makes, the more taxes that they have to pay on that money. Okay, so just like something to think about, why do you think some taxes use a graduated income rate? Well, there could be several reasons. I think in general, if people are making more money, then they can afford to pay more taxes than those of us who are making less money. Okay, so some states do decide to do a graduated income tax. Okay, so let's do an example with graduated income tax. It says Ellen grosses 49,700. I don't really think we've used this term before, but grosses just means like her gross pay. Okay, her total pay. All right. She has a personal exemption of $4,400. So remember, a personal exemption means that's the money that is not taxed. The state taxes 1% on the first $3,000 and 3% on any amount over $3,000. Find Ellen's annual state taxes. Okay, so first remember we have to find her taxable wages. And to do that, we take her gross pay and we subtract the money that is not taxed to therefore find the money that is taxed. So the money that is not taxed is $4,400. And that's going to leave us with $45,300. That's our taxable wage. Okay, now we have to go through and do this graduated commission, not commission, sorry, graduated tax. All right, so the state tax is 1% on the first 3,000. Well, she made a lot over $3,000, right? So our first thing would be taking $3,000 and multiplying it by 1% or 0.01. So on the first $3,000 she made, she's going to be taxed $30. Okay, I'm going to do this next part in red because this is where we struggled with our graduated commission. 3% on anything over 3,000. Okay, so we're not taking 3% times 3,000. It's everything over 3,000. So we need to figure out how much over 3,000 Ellen made. So to do that, we take our taxable wage, which was 45,300, and subtract the $3,000 that we already counted. And what we have left is 42,300. So this is the number that she was paid over 3,000, and we therefore multiply by the 3% income tax rate. Okay, so that's the amount over 3,000. And we're going to multiply that by 0.03. And that's going to be $1,269. So then to find the total graduated tax, I'm going to take the $30 that I was taxed up here for the first 3,000, the $1,269 that I was taxed down there for the amount over 3,000, and I'm going to add them together. 30 plus 1,269 equals $1,299. Okay, and that is my final answer. Got a lot of colors going on here. Oh, for some reason it didn't want to let me highlight that, but that right there is my final answer. Okay, let's look at another one. Catherine's annual salary is $34,500. She is paid semi-monthly. Catherine is single, and her personal exemptions total $2,000. How much does her employer deduct from each paycheck for state income tax? Okay, and we're going to use this table over here to find our graduated income. All right, first step, just like before, would be to find her taxable wages. So we take her annual salary and we subtract her exemptions, because remember, exemptions are not taxed. And I get $32,500. So that's the amount that she is taxed on. Okay, so now we're going to go ahead and look at this graduated income tax table. Okay, so for the first $1,000, the tax rate is 1.5%. Okay, well, we are way over $1,000. So we are going to start with that 1.5% on the first $1,000 that Catherine made. And then I'm going to multiply that by 0.015, which is our 1.5%. And that's going to give me $15. Okay, so of my $32,000 or $32,500, I just counted the first $1,000 that she made at 1.5%. So I'm going to right away subtract that $1,000 off, and I have $31,500 left to still be taxed on. Okay, and remember, that's going to help me later when I get to this over part. All right, but we're just going to take this one step at a time. So now it says on the next $2,000, my tax rate is 3%. So again, looking at this number over here, I am way over $2,000. So I'm going to take that $2,000 and multiply it by 0.03. All right, so for that $2,000, I am taxed $60. And then I'm going to do the same thing I did before. Okay, I had $31,500 left, and I was just taxed on another $2,000. So left, I have $29,500. All right, so then our graduated tax table says on the next $2,000, tax at 4.5%. Well, again, I'm way over $2,000. So on the next $2,000, I'm going to pay 0.045 in taxes, which if I type that in my calculator, I get $90. All right, so 29,500. I just was taxed on another $2,000. So I'm going to take that away from my total, which gives me 27,500. If I go back to my tax table, anything over 5,000, I'm going to get taxed 5%. So notice here that I've subtracted off $5,000. So this number right here is my amount over 5,000. Okay, that was the concept we were kind of having a hard time with graduated commission. But that is my amount over 5,000. So I'm going to take 27,500, and that is what I'm going to multiply by my 5%. And I get $1,375. Okay, so now to find how much her employer deducts from each of her paychecks for state income taxes, I am going to add all these together. So 15 plus 60 plus 90 plus 1,375. And I get $1,540. But this is annual, right? All of these numbers that I use have been from her annual salary. The question asks, how much is deducted from each of her paychecks? Okay. And if we know that she is paid semi-monthly, just like before, I take my annual and I divide it by 24 paychecks a year. So 1,540 divided by 24, I get $64, and I'm going to say 17 cents from each paycheck. So that's kind of an extra step there. All right, if we just wanted their total graduated commission, or commission, I keep saying commission, sales tax, it would have been that $1,540. But this one had you take it one step further, and we actually used this formula right here to find our final answer of dividing it by 24. All right, so that was kind of a lot. But let's try one more example just to get some more practice. All right, Andrew earns $51,472 annually. He has a personal exemption of $5,800. And then we're going to use this as our graduated tax. And we are asked how much is withheld bi-weekly paycheck. Okay, so let's do this. I have a feeling I'm going to run out of room. I didn't leave myself much room for this one. Okay, so first off, I have to find my taxable wages. So I'm going to take my annual salary and subtract my exemptions, because remember, my exemptions are not taxed. So when I subtract that, I get 45,672. This right here is my taxable wages. So that's the amount of money that I'm going to be taxed on. Now, based on my table here, the first $3,500, I am charged 1.5% taxes. So if I look at my taxable income, that is way over $3,500. So I know my first $3,500 is going to be taxed at 0.015, which is $52.50. And I'm going to do this just like before. Here was my taxable wages, and I was already taxed on $3,000 of that. So I'm going to take my $45,672 and subtract 3,500. Almost made a mistake there. And I get 42,172. Kind of some weird numbers on this one, but that's okay. All right, so then my table over here says on the next 6,500, I'm taxed at 2.5%. Well, if I look at this number, I'm way over 6,500 left. So on the next $6,500, I am taxed at 2.5%, which is equal to 0.025. So if I type that in my calculator, I am taxed $162.50. All right, so this is how much I had left. And I'm going to subtract the $6,500 I was just taxed on. All right, so I'm going to subtract $6,500, and I have $35,672 left. All right, and then my last tax bracket here says 3% on amounts over $10,000. This is my amount over $10,000 because just like we said before, what I've subtracted off so far is $10,000. So what I have left is $35,672, and that's my amount over $10,000. So that's the number I'm going to multiply by 3% tax rate. And if I type that in my calculator, I get $1,070.16. So to find my total annual taxes, I'm going to add these together. $5,250 plus $162.50 plus $1,070.16. And I get that my annual tax rate is $1,285.16. So then the next question says, how much is withheld from Andrew's bi-weekly paycheck? Well, if you flip back in your notes, you'll remember that bi-weekly means 26 pay periods. So I'm being paid 26 times per year. So I'm going to take my annual tax rate and divide it by 26, and then that will tell me how much is taken out of each paycheck instead of how much is taken out for the entire year. So type that in your calculator, and I got $49.43 for my final answer.